Hey guys, Mike here. So obviously, a ton of terrible economic news came out this morning. And of course, the whole Walmart thing, which we already talked about last night, I reported to you, came out and kind of drugged the market down today. All went in the red. But what do we have? Big mega cap earnings, Microsoft, Google, you got Visa, you got Chipotle, Texas Instruments. I'm going to take you through all those and do it in the same format that you guys liked in last earnings season, I should say. So I'll do it that way to make it quick and easy for you guys. And I want you to watch very carefully which ones beat earnings and actually got rewarded, and then which ones missed earnings and what happened to those stocks. And then that way you see there is huge favoritism when it comes to certain companies in the market, right? If you are heavily bought up by pension funds and hedge funds, then you can barely make it through earnings, and all of a sudden your stock goes up or doesn't get destroyed if you miss, right? Versus some of these kill earnings and still sell off or barely get rewarded at all. It's pretty interesting to see. But, you know, starting off with this morning, I sent this out to the members, and it was just, I mean, it was hot, ugly morning, by the way. And, you know, as you can see, the IMF starts the morning off by slashing global growth forecast and citing a gloomy outlook. And so they come out, downgrade its forecast for the global growth, blaming worse than expected inflation for an overall gloomy and uncertain outlook. They expect the global economy to grow by only 3.2% this year, a downgrade from 3.6% after they already downgraded it at the beginning of the year. It lowered its growth estimates for the U.S. to 2.3% from 3.7%. That's quite a big jump there. And so obviously things aren't looking good there. If we keep scrolling down, you will see right here that the China, which of course is the second largest economy, they expect only 3.3% growth, down from 4.4%. I showed you that map yesterday if you saw it about the countries and GDP. Then you got Shopify come out. They got crushed today by 16% because they're going to lay off 10% of the workforce by today, okay? So they're toast as well. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And before we get into earnings, remember, guys, what have I told you? I've been saying this for a week, and so far I've been proven right. Here's the bar. Where's the bar at? On the ground. That's where the bar at. And I should say that it's on the ground for mega cap, big cap type stocks, okay? The small ones might get destroyed. But the ones that hedge funds are in, the ones that all these pension funds are in, things like that, the ones the politicians are in, they seem to be getting a big time pass so far as we can see. And you'll see that in this set of earnings as well. And we're going to start off with Microsoft because that's the one everybody was kind of waiting on at first, and then we'll go with Google next. And so here's what they reported, or I should say missed.
It's a miss across the board for Microsoft. EPS $2.23. We were expecting $2.29. Revenue $51.87 billion. That was another miss. We were expecting $52.44 billion. And then Azure cloud growth. That's also a miss. Only up 40% versus CNBC's review of analysts. We were expecting about 43% on that, Scott. So disappointing across the board. But Microsoft also blaming those foreign exchange headwinds for some of this, Scott.
But of course it doesn't matter because obviously they like what they heard on the call, and all of a sudden the stock went from being red to up 3.62%. Keep that number in mind when we get to Texas Instruments, by the way, and you'll see how unfair this market rally is to companies and stocks.
I'm seeing a few minor misses, but perhaps not as bad as some were anticipating, so that is why shares are up about 2.25% in the after hours. Revenue coming in at $69.69 billion. 69.9 was expected, so just a tiny miss there. EPS, though, a miss by about 7 cents. $1.28 was expected, coming in at $1.21. Cloud, this is important, coming in at $6.3 billion. That is shy of the 6.4 that was expected. YouTube as well, which we know has struggled broader than search advertising. That came in light as well, $7.34 billion versus $7.5 billion. Again, minor misses here, and that may be why shares are actually popping now up nearly 3.5%.
And obviously people like what they heard on this call as well for Google, and it's up around 5%, so it's just continued to climb. after hours.
Well, 20 quarters, and Texas Instrument hasn't missed its earnings per share. So earnings did come in higher than what the street anticipated at $2.45. The street was anticipating $2.12. So that's well over 1.6% growth year over year. I should say quarter over quarter. Revenues, $5.21 billion, also a beat. If we're looking at Q3 guidance, they guided a little bit higher than what the street was anticipating, with a range of about $2.23 for earnings to $2.51, so much higher than the street. You also had Q3 revenue guidance, also higher. Keep in mind, Texas Instruments is considered a bellwether for the semiconductor space because it's in absolutely everything. They provide chips, analog chips, for everything from auto to industrials to consumer electronics. So this report was a strong report that we're seeing, and the stock is reacting right now, up 2.6%. So again, beat on the top and bottom line. Revenue for Q3 and EPS for Q3, also the guidance, I should say, came in higher than anticipated.
And this is what I'm talking about. So Texas Instruments ends up beat both top and bottom line for 20 straight quarters. Guides up, and it's up whopping 2.5%. It's just all over the place right now. But what's crazy is what smoked them all was a restaurant company.
Here's what we're looking at for Chipotle. Slightly lighter than expected revenues, as you said, at $2.2 billion versus estimates of $2.24 billion. Comps increasing 10.1%, very high, but also a bit lower than expected. EPS coming in at $9.30 for the quarter. Analysts were looking for $9.04. The EPS figure excludes a few items in addition to a $10 million investment gain, so it's unclear if that number is comparable. It's in-restaurant sales up 35.9%. Digital sales were 39% of its food and beverage revenue, so still a very high number. In terms of guidance, it sees Q3 comps up mid to high single digits. That compares to 7% gain estimated by analysts.
As you can see, this one's up 8.25%. I mean, it is rolling, buddy. And also, Visa actually reported, but here's the crazy part: beat top and bottom line, easy. And, they basically crushed earnings, but just like American Express and others, they end up selling off. And so, the big takeaway from these earnings is to look at it and say, hey, now we know the bar is under the ground. Now we know we don't have to worry about Apple earnings. We don't have to worry about Facebook earnings. None of them, right? Because a lot of them got hit. Remember, a lot of them got hit when Snap came out with their stuff, right? So a lot of these already are down going into earnings, right? Google got hit. And so, again, it's almost like it doesn't matter now. It really doesn't. I mean, you reach those times in the market where they just kind of say, everything's great. We're all good, And somebody sent me something. I think I know why the market's acting like it is, even though it continues to put the blinders on. And it's how much money we have per income class, which I'm going to come out with a video on that to follow up on a video I had done before. And, a reason why it's so funny to watch the credit card companies kill earnings, top and bottom line, some of them guide up, and they still sell off, And, of course, why are they killing earnings? Because inflation. Everything costs way more, right? We're still buying the same stuff. We're just buying it for a higher price right now. And so, that's what's happening. We're still traveling, still got money out there. More money's coming, more money's on the way. The government is putting through a couple bills right now to put more money into our pockets, to put more stimulus out there. The Fed hadn't actually shrunk their balance sheet yet. And so there's just so much liquidity still out there. And so that's why I always say, man, people that expect inflation to drop off a cliff in the next 3 months or so, I don't know how that's going to happen, guys. I really don't. I can't imagine it, because it's like, you've had companies report earnings. They're also reporting they're raising prices still. They're going to raise prices. Amazon Prime over in Europe, is going to raise between 20 and 45% on their memberships, right? In Europe, like they aren't going through enough. Whatever they got to do, to get the money out of us, they're going to get it, right? They're going to ride this puppy out. And so they know there's a lot of money, a lot of liquidity still out there. They know the governments are putting stimulus out there. I showed you that yesterday. And now you got our government, not just 20 states. Now the federal government's going to get on the act and try to put more stimulus out there to give more money to people who have Social Security. And so it's this vicious, never-ending loop. How do you beat inflation if you continue to sit there and keep putting money into the system like that? I don't have the answers, right? Never been through it before. And that's obvious. Our government hadn't either. And so our Fed, they're going to roll out there and go, 75 basis points, pretty much baked in the cake at this point in time. Probably do no interest rate hike next month. They hadn't even begun to really shrink their balance sheet, And so the fight against inflation, I don't I don't see it. I mean, where is that fight? I don't understand how people expect inflation to drop off a cliff. I don't get it. So might be missing something. We'll see. But I think with all the money out there, you're just going to see this become a bigger problem. And, we'll see from there. But tomorrow morning, there is really no earnings that should bring the market down. So it should be green. In the afternoon, you got Facebook and Qualcomm, I believe it is, maybe. And so, we'll see what happens there. Again, I think that they've already been beat down so much, it's not going to matter. It just isn't going to matter. So, a lot of people bought puts on Google and Microsoft. Now, I thank God I didn't do it, and so they got burned big time. A lot of people smoked. And so, I think you're starting to see this kind of rhyme happening here or something where it's like, again, it's hard to bet against something when the bar is so low. Right, and so just be careful with that. So hope you got some out of it. Let me know if you like this format. I know you guys liked it during the last earnings seasons. It makes it easy to put it out there to you guys. And so just let me know. So I'll see you guys later. Have a good night.